Good evening, everybody. Thanks for having me tonight. I only have 6 minutes. The lens I'm going to use to frame my conversation will be as a value investor, as Stephanie said, and thanks for the kind words. And when I look at public equity markets, actually, I believe that public equity markets, they actually carry two characteristics, one of being irrational and the other one of being asymmetric. What do I mean by asymmetry? And I refer myself to the theory of George Akerlof that maybe some of you know of information asymmetry. And today we do have an unequal access to company data. When I mean company data, I don't speak about financial data that has to be disclosed, but other type of data that can actually fuel the investment journey of investors. Some information is available, but investors across the world have to incur a high cost, or information is available in a fragmented way through various platforms. And I think we all agree that there is an unequal access to financial education, financial literacy, and also to the quality of financial advice across the world. When I speak about irrationality, I tend to use a statistic which I found very interesting, which is called the human guess-right ratio. And when you look over the last 20 years, the guess-right ratio of investors on public equity markets or stock markets has been of 55%, meaning that when they enter or exit the stock market, how good they are at predicting then the upcoming movement. And actually 55%, if you think about it, it's like taking a coin and just flip the coin, and it's actually nearly the same statistical probability. And also having had the opportunity to teach value investing to thousands of students across the world, I realized that a lot of humans have unrealistic expectations about market returns. So what are the forces that, at least according to me, will shape financial service industry by 2035? The first one, which will indirectly influence financial service industry, and you probably know all those logos on the right-hand side, is how our brains are being trained and reprogrammed on consumer behaviors. And today, and this will actually become even more true for Gen Z and Generation Alpha people when they will enter financial markets, that we all want on our content, on the services we interact with, we want to have personalized information. It has to be aligned with our values. It has to be immediate, and so it has to be aligned with and we want to be autonomous and independent on that as well. From a technology perspective, I believe that the data universe will continue to grow exponentially. And if you remember, I said in the beginning that I believe that public equity markets are irrational and asymmetric. I believe that through the expansion and exponential growth of our data universe, we're going to actually reduce this information asymmetry for investors across the world. And when I look at other technological, let's say, engines that will come, and I speak here about general purpose technologies, I mean, you have probably heard the term artificial general intelligence, and I think that we are a couple of months, if not 1-2 years maximum, away of having AGI. In 2035, we're going to have serious conversations about artificial superhuman intelligence, and I don't have the time tonight actually to go into the moral and ethical implications of that. And probably as well as we reach the physical limits of the current, let's say, microprocessor architectures, we're going to have probably at least quantum computing as a cloud service available to us. As even myself as an independent board director, and so you probably look at and are thinking, what's the impact on the workforce in companies and specifically in the financial service industry? There is not a lot of academic research on that, and I just picked one study that is very interesting from Eric Brynjolfsson. You may know he's a very famous researcher at Stanford University who publishes once per year the Stanford AI Index report. And this is a study that has been done on applying AI actually to call center agents, which I think applies to financial service industry. What is interesting is that what you can see, and you have the reference of the study, that actually applying AI, so after the deployment of AI for call center, human call center agents, that they have been upskilled. Even if there was an AI outage, the skills remained higher versus pre-AI deployment. We're going to have specialized AI models as well, which will reduce human bias. And again, coming back to asymmetry and irrationality, will increase actually rationality and more rational, let's say, investment processes. But let's not be fooled. I mean, I'm not the biggest fan of efficient market theory, so we're going to still have people who have preferences on how they invest on markets. Financial services industry, and not only that industry, will have this type of digital twins, probably more on the left-hand side or on the right-hand side. On the right-hand side, I actually asked Midjourney to share with me how would a financial advisor look like in a wealth management context. But it's going to be more like on the left-hand side, where probably our kids will interact with those digital twins, and they will not know actually that they are not talking to a real human. I believe that the future is near, and probably the type of interactions that we're going to have very soon will be this type of prompt. Somebody mentioned earlier ChatGPT, which is basically, I have 50,000 euros, and you would ask actually a chatbot, into what can I invest? But I'd like to invest into a company where management is treating its employees correctly, and also where customers are happy with the products and services sold by the company. Actually, what is wrong when you look at the prompts, what is wrong in this prompt is that, and this is what you see now in red here, large language models or AI specialized models of investing, they do have contextual memory. So I don't have in the prompt to say actually what are my preferences. The models will exactly know what are my preferences when investing. And of course, we will interact in a way that will be multimodal. So by multimodality, I mean we will interact with AI not just by chatting, but other means, other cognitive means interacting with AI. With that, I'd like to thank you for your attention and wishing you a nice evening. Thank you very much.